Monday, November 13th, market analysis, Stan Ehrlich. Good morning, 9:55 California time, just a little after the middle of the trading day, from 6:30 California time to 1 o'clock. Stock market historical trading time frame. Now, I start out with the stock market indexes and usually the E-mini, which I'm doing again this morning. We rallied up to the previous high of the move, in this case, October 12th. On Friday, poked into new high ground very slightly, and I have to add very, very close to my custom RSI, RSI, overbought conditions. When I reach or exceed those conditions, the market tends to top out usually very soon, sometimes the same day, sometimes within a couple of few days. Then I'm also looking for certain types of price action in order to come up with green, which happens during the day while it's trading, or red, which happens again during the day, during trading hours, real time, buy and sell signals. That's the ER signals. We picked the top of the rally here with two other sell signals right next to them, and the bottom of this break for a nice few-day rally. Too bad we didn't get one at the bottom here. We did get one, of course, on October 13th of 22, the exact low day of the stock market overall, and many, many other markets. What are we doing now? We barely got above yesterday's high. Today, so far, 44.36 3/4. Friday, 44.35 1/2. So just a point and a fraction, but it's higher than Friday's high. So now we're a little bit lower on the day. I think we're losing momentum. I think we are so close to overbought, and I think that we are in the process of topping out. Short-term, minor downside correction, probably going to last this week. And if it does, and we start to turn back, I'll have a lot of things to say about this red dashed line that you're looking at right now, or a very small modification of it. But that hasn't happened yet. Let's start to work our way lower, maybe down to 42.55. I'd settle in for 42.97-ish, but a pretty good dip. No new lows. Definitely not below the low of October. That was the, again, seasonal 28 times out of 31 years. It's bottomed out in October for a decent or spectacular rally, and it did it again this year. I pinpointed it for you before it happened, while it happened, and of course after it happened last year. I've only been doing the YouTube for a little over a year now, so I'll try to keep doing it. Next chart is Spider, almost identical, not quite, to the E-mini. Overall patterns, of course, et cetera, are the same, but this is the regular trading hours for the stock market, not the overnight stuff for futures, et cetera, and forex. We have a gap to close, 3 gaps to close in the Spider. I think we're coming back down to close the highest gap, which would be around 431 and a small number. And this week, and I'm not ruling out even this week, a possibility of 423.5, and we're at 40.5 right now, so 17 points down in a week. Not that small, not that large. That's exactly what I think. Now, there's a third very small gap way down here at 418 on the Spider, and I don't think that's going to get closed. I think that's going to go down in the books as a breakaway gap, and it's not going to get closed. So I'm looking for this downside correction to start immediately. I think it's today, maybe. But if we do have a little bit more strength for a day or two, it's not going to change my mind. Next chart, Spider 1-minute chart, opened on the downside, and the white dropped off to the low of the day here, rallied to that slightly higher high, and is now zigzagging its way down, currently down on the day in the Spider, extremely small 10 ticks. The DIA we'll get to in a moment. It's up 3/4 of a point. Not that that's a lot. It's not. And the QQQs are down on the day at the moment, 90 cents, which is modest. Next chart. We're looking at the QQQ. It never got above the high of Friday, at least not yet, and it may not. The high of Friday is extremely close to this resistance level. I'll drag it over to the right here a little bit more, and that's based on a high back in early September 1st of this year. And in general, although it's very general, an original gap that created back here and approximately the tops of the market, but that's got a separate little resistance area, which at this point I am going to drag over the far right and update. There we go. Now, overbought. Heck yes. Friday and today, and even last week, most of last week, we're overbought. So we're due, supposedly, for a move back down again. There's 3 gaps that close like the spider here in the Qs. And the highest of the 3, I think, is going to be closed without much of a problem. And again, I'm not ruling out 357 in the third-ish to close this gap. The bigger of the 3, I don't think the one on the bottom is going to get closed. Next chart. NASDAQ. We're looking at a previous downward slanting wedge. Some people would like to call it a downward slanting channel. They're very similar price formations. They're not really that much different. Break of the bearish trend line. Definitely a bullish signal. But we got overbought and we had a bearish engulfing, which did not work on Thursday of last week. Friday, we made the higher highs. So we have a small, very small loss. We're standing aside momentarily. I'm looking for sell signals. I do think this market is ready to turn back down again, in my opinion, and it would be back into the ballpark of 14,600-ish in a week or so. That's the NASDAQ futures. And the DIA and the Russell, you'll find, is a little bit different story. We just finally closed today an old gap in the DIA that goes back to September 20, September 21. So we're looking at almost 2 months ago, month and a half ago, and it's closed. Gaps are almost always closed. Usually it doesn't take this long. But look what happened on the downside. You almost closed on Thursday of last week, a gap that only happened a week earlier. So that higher gap in the DIA is done. The relevant to the spider and QQQ gap in the DIA is in the middle of the range and sizable. That's the one I think is going to be important on the DIA this week on the downside. We were overbought. It's a couple of days later and a minor new high. You can start to look at divergences maybe. New high in the price, but not in the indicator. That's what our divergences are. So gap closure have been almost now overbought, ready, prime territory to go down. If this did start to break to the downside, we would have a pretty good indication that the gap down here is going to get closed. Next chart is the Russell 2000. Take note. Oversold condition on October 27, 28, 30, I meant. October 27th was the October low and is the lowest low also for the Russell 2000, which was on that day a new low for 3 full years. That is normally extremely bearish or a whopping big bear trap, which it was. Oversold. Just tickling, just a little bit of a new low for 3 years, and zoom. The first gap already closed days ago. The second and last gap for the Russell is partially closed on Thursday and Friday. So again, this is opening the door for a little bit lower lows, not much, on the Russell. It may even test the lowest low again at 160, 160-ish. That's a possibility. Now let's go look at this October low chart real quick. I tried to pinpoint the middle of the month, but not necessarily because it was the middle, as the timing for my low. And I tried to pinpoint 406 to 407.5 as the price level at which it would happen. Hey, it happened at 409.21. So I was pretty close price-wise, but I was too early time-wise. Anyway, that's it. That's your October low in the month of October in this vertical green column. Yeah, obviously toward the end, but October, zoom, zoom, zoom. And this is, of course, is the spider SPY. So gaps to close, etc. Now, futures. And I always take around 8, 9, 10 minutes for the indexes and then go to the futures for most of the rest of my 20 to 30 minute video. Here we go. Different perspective on the E-mini, support area, oversold condition, turn the market around. There's no signal there per se. Last buy signal was on October 6th, and it worked for about a week or so pretty nicely, not great. We caught the top to the day. That's why I'm developed, past tense, it's available, the ER signal trading system. So we got signals on the exact high day, and the E-mini came down, oversold in support area, and almost reached an objective on a pattern that I thought was not going to work. And in the end, it was almost perfect. So here we are. Resistance looks like it's going to turn down. Spider right now down 40 cents. DIA sinking a little bit, up 50 cents. And the Q's a little bit more than a point lower at the moment. Next chart, NASDAQ. Talked about this before. No changes. Like what I see. I think it's going to come down, at a very bare minimum, to the low of last Friday, which is just simply testing the previous bear trend line. But I think it's going to sink into its old channel a bit and then turn up. And I think it'll be an up week next week. But this week, I'm voting in the downside direction very modestly. Next, bonds. Support are holding really good. I don't think it's going to hold, though. I think that since we got overbought last week at one point, and we had a bearish engulfing or almost on Friday, or Thursday of last week, sorry. I think we're going to break this little support area that's got actually 4 points out of 6 days. That's pretty good. At 112, I don't know, 11, 12, 13, 30 seconds. Whatever today's low is good enough. You break today's low and you're going to slam dunk another, I don't know, 2 points, it looks like. Maybe 3. And then I'll start talking about this little guy right here. But I'm not going to talk about it right now. It's going to take another couple of weeks maybe to really look good. 10-year notes are leading the way here a little bit. We did buy the bottom. This is an ER3 example trade in TradeStation. Great trend line from the bottom of the green until we got a sell signal and got stopped out. Our last signal was a sell signal. I'm looking for this downside correction, and today is a new low since last Thursday, the sell signal, to continue down a little bit more in the ballpark of 106 and let's say a quarter this week and turn up. Sound familiar? That was 10-year notes. Okay, crude oil, oversold, bouncing, and that's about all I got. I think it's going to come back up into this resistance at 8104-ish. Don't have a lot to go on here, so I'm glad it's turned up for a couple of days after being oversold, but it could have tested a support area, and it didn't quite get down there. And so I'm thinking it's going to come up to resistance at 79.80, very possibly 83.30. Next chart, natural gas, oversold conditions in general in an area of support near lows that were back in May and June, turned around after being oversold Thursday and Friday, and is rallying nicely today. I'm not overly impressed. There's a lot of technical resistance above this market, but there's a gap. So I have to say 3.45 is going to be the rally high, closing a gap and maybe getting up to or overbought. We'll see. Next chart is heating oil. Bullish engulfing on Friday, and wow, it took off like a bat out of where today. This is a great signal and trade so far. No ifs, ands, or buts about it. Remember, ER3 waits the day after the green or red to get long at the little dots. We opened lower than our bid. So we are long at the opening, which is slightly below the closing price of Friday for this continuation chart on heating oil. Probably mimicking very, very, very close to the nearby heating oil contract. I forgot what Christmas might be. It probably is, or maybe January. But that's what we're long from on ER1. We're almost high and last on a darn good, strong rally today. And that was ER3 trade. I apologize. ER1, we're long when we started making new highs on Friday above Thursday of last week. So slightly higher. But ER3 and ER1 are in very close to the same prices, and up, and away we go. I don't have them showing on the screen. Maybe I'll bring it up for you tomorrow. Next chart, gold. We got almost the top of the market. You see red right up there, almost at the highest high. Now, we did not sell the highest high. And we get in when the engulfings occur, and or we get to the proper price, which is the calculated price within a few days for ER3. But one is always going long or short when we see green or red. So we're long from this day. I'm not saying exactly what price. And we're short from this day. We're long from this day. And we're short from that day. And we're long a few days. Probably lost a little money on that. That made some money. That made some money. That made a lot of money very quickly over a 2-day period and more. You look for the red and green. Decide for yourself. Next. I should say, for the moment, I have to continue to be a little bit more bearish, but we came down into a support area and we got pretty darn close to oversold. So this may go up a little bit for a couple of days, but I think we're going to see lows lower than today's lows probably this week. Next, silver. Same kind of story. Support didn't hold, but we're now higher on the day after going down quite a bit. This looks like it's starting a minor bounce that I think is going to go not very far, 2260. Well, big deal. I can't build a bullish story here at all. I still have to look for lower lows, hopefully oversold conditions, and maybe coming all the way down into the lowest support level down here around this 20.8. Yeah, we got the high. We got the low. We got the high. We got this low. We got both highs. And we got that low. I'll quit while I'm ahead. Next, platinum. Oversold, almost down to a support area. And we're popping back up dramatically today. So I think we saw a low on Friday. And today's low is extremely close to the low of Friday's low. We caught this bottom, that top, that bottom going backward. No, that didn't work. This was not quite what we're looking for. That was perfect. That was perfect. That was extremely good. That was extremely good. And that was perfect. And that was extremely, what the heck? Next, high grade copper. Outside up day, bullish engulfing, all by itself implies a rally. How far? Well, probably to at least test 3.7 at a minimum. Maybe this is going to start something up to 3.9. Can't tell. But I'm turning modestly friendly at this point. Support seems to be holding, and we got a bullish engulfing. Next, soybeans. We were long from the bottom, short from the top. That was a darn good buy signal. A few in there that worked or didn't work. We were long from the bottom, got stopped out on Thursday. Nice trade. It's now rallying, and it's coming close to making a higher high, which, of course, we're not long anymore. So now I have to wait for new signals, probably going to be a sell signal, probably going to be a slightly a new high ground. And I'm voting for something between 1400 and 1430 this week. Then go short, maybe. We are still short soybean oil. What a ride. Got the top of the market, the second high in a double top formation. And despite some false buy signals on the way down, that one was a good buy signal on a short-term basis. We are still in the trade from the beginning of the bear move. We don't get out because we get a signal in the other direction. We get out when we get stopped out, and we didn't get stopped out. The yellow line is our smart trailing stop, STS line, that follows the market in a combination of ways. It is not a percentage. It is not an amount that's a constant percentage or amount. It is a combination of a variety of indicators. I'll only go that far for the moment. We got soybean meal. Wow. Screaming overbought again today. Huge rally today. Big. 449 around unchanged up to 473 at the moment. Huge. But it's overbought again, and it's very close to the high, which is a resistance level on March 7th. I think it's about to top out. Don't jump the gun. See if it can blow through the previous top. And what it does, if it can do that, after blowing through the top, this could be starting something very dramatic. I just can't tell yet, but it looks like the probability to me is it's about to top out. Next chart, corn. Bullish engulfing today is so close to an official green ER buy signal, it's ridiculous. But code is code. So this is exactly what it's supposed to be, color-wise, et cetera, et cetera. And all I can say, it came to within 1%, let's say, of being an official signal. Bullish engulfing, damn near oversold within the allotted time, and we had a previous buy signal. It's my opinion that corn is bottoming out today. Now, we're already up in resistance a little bit already, and there's a resistance area above the market at 492 that I think is going to get hit very quickly, probably 496. And I cannot rule out a variety of levels up to 510 and even higher maybe. I think this is a very good turn, in my opinion. I just wish the darn thing had turned green. But again, numbers are numbers. Corn, now wheat. Almost a bullish engulfing, not quite, nowhere near oversold, so that's no reason. Very neutral. But a big sideways trading range with slowly higher lows, and you're still smack in the middle of the damn thing, so it's pretty much neutral territory. The lowest low was oversold, and everything else since then came close, but is at a higher price and a higher price. And now we're trying to turn up. I'm going to shut up from that point. I don't know and waiting. Cattle, oversold. Fourth day now. Significantly oversold, 17. That's pretty darn oversold. Now, although we did it just last month on October 24th, it had been all the way since March that we got down into those rarefied levels of oversoldness, which bottomed out hugely in March and bottomed out for a modest rally, starting something a little bit more bearish only last month. So you can't really trust this rally that much. And I think it's going to come back up to at least 179, call it 180. Yep, and maybe up to about 82 and a quarter. And then I think there's a darn good chance it could turn down and make lower lows again, which is going to start to look very bearish longer term. Next chart, lean hogs. We're looking at live hogs, lean hogs, whatever. We were long almost at the exact bottom day, rode the market up, got stopped out. That was Wednesday of last week. Good trade. Okay, fine. Let's erase it at this particular point. I've showed it to you for a couple of weeks, and we are going to erase it right now. Disable the, whoa, I missed it. I'll forget it. I'll do it tomorrow. Making almost new highs. Well, obviously, I wish I was still long, but if you believe in your trading system, you follow your trading system. But how do you believe in your trading system? It's because you followed it very closely for your satisfied amount of time, which could be weeks, days, months, even more. But you're convinced, it's a good system. So now you do what it says. That was 10 years ago for me. All right, next, OJ. I still got to tell you that the October 31st huge bearish engulfing ER sell signal is still the top of orange juice. But now we're rallying a little bit more than I would have expected, although we're still below the previous bull trend line. And we're coming right up underneath it and stopping. I wished we were closer to overbought, but we're not. So this leaves some elbow room to go up a little bit more. We finally closed on Friday an old gap that was a couple of weeks earlier. So that gap is closed, remember? Gaps are like a black hole in space. They tend to suck the price action back into the gap sooner or later. And this is pretty normal, a week or two. So that's exactly what I'm thinking. Stock market index is on the way down. By the way, they're coming back up a little bit. Spider is now only down a few ticks instead of 50 cents. DIA went up just a very small amount. That's nothing to write home about. And the Qs are down 84. So up and down, up and down, up and down, up and down a little bit, with a little bit of a tinge to the downside in the last couple of hours for the indexes. That's about the best I can say in OJ. And here we go with the cocoa. I can't believe cocoa is doing something like orange juice did. This is so overbought, it's ridiculous. We're looking at 87. And by far and away, most of the time when you get up to 87, you are in the thresholds of topping out. So what can I say? This is about to have a down week. And if I get a signal, an official red ER sell signal, like over here, I can be a little bit more fanatic about it and certain about it. But I have to tell you, this is no place to go buying cocoa. That's for damn sure. And I'm looking for sell signals. Absolutely. Coffee. Nice rally today. Never got overbought. Never got up to resistance. I think it's still got a good chance of 180. Yeah, maybe this week. And then it's going to roll over again. That's the best I can say. And sugar, it's certainly headed toward new high ground again. Anytime it made a new high, it backed up a little bit, but not much, and not for very long. And I'm going back to August. I think this looks like it could explode to the upside again. Sorry to say that. There goes your sweet tooth. Next, cotton the rag. Tested support very accurately. Oversold condition significantly. What was the number here? About 13, below 13. Wow. That's extreme. And it turned around at the bottom of support. So there's one of my favorite combinations. And we're not doing that well today, but on Thursday and Friday, we started to move up. And today, just a little bit, but the day's not over. I'm still looking for a rally, probably at least 85 and a third. Maybe up to the resistance area that it's already topped out at quite a bit since July. I'm not ruling that out at all. And that would be 88 to, 90. Next, here's the E-mini. You guys have a great trading day.